Uh-oh. Okay.
There you
Um,
are.
I need to do a Zoom thing real quick because we're about to go over our limit. All right. All right, it is 10 o'clock. Good morning, everyone. My name is Nicole Boynton. I'm Director of Education with Texas National Title, and very excited this morning for us to present information to you on FinCEN, which is a new rule. You've probably seen this word and wondering what the fuss is about. So we are glad that you took the time to join us this morning. And without further ado, I'm going to turn it over to the lady with all the info, and that is Latra Szal, who is our president and chief legal officer at TNT. And she is going to give you all the information. So please take good notes. And if you have questions, we're going to ask that you put those in chat. I will field those chat requests. If we don't get through all of them, we'll make sure we send a follow-up email after the call later today. So thank you again for joining us. And Latra, please take it away.
Hi, guys. So as Nicole said, we're going to talk about FinCEN, and it's a change that's going into place March 1st. So it's going to be happening here pretty soon. You're writing contracts right now that will be affected by it. So let's talk about what it is. There we go. All right, so FinCEN is the Financial Crimes Enforcement Network, and it is a department of the U.S. Treasury. The interesting thing, and I think something that's important for you guys to know here, is what we're going to be doing in the transactions that are affected by this is collecting a fair amount of data from both buyer and seller, and then we turn around and transmit that data to the FinCEN department so that they have it as needed for the purposes that they're going to use. Even though the word enforcement is in their name, they don't actually have enforcement powers. So really, this is data collection. I don't know if you guys have ever closed a transaction in the last couple of years that was under a GTO order, a geographic targeting order. This in Texas was a list of about 6 counties. And what the FinCEN instruction said to us as a title company in that county, and Travis County was one of them, is that if we had an entity purchasing for 300,000 or more and it was cash, we had to collect all of this data already and transmit it to them. So now the rule, the residential real estate rule, is going to replace those GTOs. And right now, if you're closing in February and your transaction is affected, you're going to be under the GTO orders. If all of a sudden you close in March, now it's going to be under the residential real estate rule. And so we're kind of at this fine line for dividing up which one we're complying with. There we go. So what the residential real estate rule says is if we have a qualifying transaction, and we're going to go through what those are, starting March 1st, title companies are required to obtain all of this information from the buyer and from the seller so that we can transmit it to the FinCEN department. So this is every single title company is required to do this reporting, every single county in every single state. So it is massive amounts of data that's going to be collected and sent, which is different from the GTOs. The GTOs were just a handful of counties that were affected. So every single transaction that qualifies now is going to have to be reported to the government. And this rule actually went into effect in August of 2024. It had an initial start date. It was going to be December of last year, had some pushback. It was delayed to March 1st, but now it is definitely going forward at the end of the month. Okay, so here's what the residential real estate rule is intended to do. We are required to collect this data, transmit it to the government, and what they're using it for is to combat money laundering, terrorist financing, illicit activity. And if you think about our business as a whole, if a borrower is going out and they're getting a loan from an institutional lender, that lender does a ton of vetting, right? So that lender is already scrubbing that borrower to find out if they're worried about any of these activities. But historically, the cash transactions have been largely unregulated. And so anybody could participate in these transactions and they weren't able to be tracked. So that's what this residential real estate rule is getting at, is let's collect those transactions that were not monitored in any way so that we can get the data on those. So here's what's going to trigger reporting on your files. If you have a cash transaction or a non-NMLS finance transaction, if it is residential real estate, and if your buyer is an entity or a trust. So I'm calling it the Holy Trinity. If you have all three of these things, then your transaction is a FinCEN reportable transaction, and we're going to have to collect the appropriate data. And the thing to know for us is that we aren't allowed to close your transaction until that information has been provided to us. And this is one of those places where we're going to need your help, because we will do the heavy lifting. We'll educate your customers about why we have to get this. But it's not uncommon for us to tell your customer that you need something, and then they don't listen to us, but they will listen to you. So I kind of want you to have a takeaway from this class of why we're having to ask for this information, and then the importance of actually getting it to us. The other thing that's kind of hard to understand here is the reporting requirement is triggered by the buyer, right? So the buyer's paying cash, the buyer's buying residential, and the buyer is going to be closing in an entity, a company name, or a trust. And so it feels like the data collection should be for the buyer in this instance. But under the law, we are also required to collect data from the seller also. So you could actually be in a situation where you write a cash contract and Nicole Boynton is the buyer, and you go through the transaction and your client midway says, oh, wait, I'm going to buy an entity. That shifts the responsibility for reporting now. And now all of a sudden we have to report in a situation where the seller wasn't prepared for any of that because it's a change in the transaction. So we'll talk about what to do with that in a minute. So let's define what cash is. Cash is obviously a true cash transaction. We're going to work up the CD. Your client's going to send us a wire. That counts as cash. If we are doing a seller finance transaction, so if you guys are negotiating a seller finance transaction, we are going to have to do the FinCEN reporting on that deal. If your borrower is getting a hard money loan or they're getting private financing, maybe they're, borrowing from mom and dad or a friend, or they're borrowing from another entity that they own. All of those lender types do not have an NMLS number, and so we have to do the reporting. So we have a whole database of all of the lenders that have the NMLS numbers. We'll look at that database, and if they're in there, and that's going to be, Chase, Bank of America, Wells Fargo, Security State, like all the national lenders are for sure in there, and our local lenders as well. But if they're not qualified as an NMLS lender, then we're going to have to report the transaction. Residential for us is defined as 1 to 4 family, condos, townhomes, and then also a vacant tract that is being purchased to build a property here. So if you represent a builder client who buys lots for cash, they're going to have to do the reporting as well, because that their intent is to build on it. All right. When I talk about buyer types, I've said the word entity. That means a company, basically. So if your buyer is going to close in their LLC, if they're going to close in their corporation or a general partnership or something like that, if it's cash and it's residential, we're going to have to do the reporting. And then also, if your buyer is closing in a trust. So this is going to be your family trusts. Usually it's like a probate avoidance trust that's been created, stuff like that. They will qualify under the law as a trust that has to be reported. And that's different from the GTOs. The GTO orders did not include trusts. We didn't have to collect from that because there's so many family trusts. Mom and dad get together and say, well, we're going to put everything in trust, and that's how we want to buy stuff. And those guys are going to have to be reported as well. We do have some exemptions. Most of our business models are not going to have any of these exemptions because they're things like governmental authorities, a credit union buying a piece of property, an insurance company buying stuff like that. So if we're just dealing with a regular investor who's buying property to buy and flip and sell in their LLC, they're not going to qualify for any of those exemptions. And when our customers on the buy side are filling out the forms that they have to fill out, they're going to be asked, do you have any exemptions? And they might float that question to you, and the answer is no. They can float the question to us too, and we'll tell them no also. But just in case you're having that conversation, I think it's important to know that your customers generally are not going to be the ones that are on this list. Okay, so as far as who has to do the reporting, there is a cascading hierarchy of who is obligated to report, and it's intended to catch anybody that might participate in these transactions. So the primary reporting responsibility is the title company. But I can see people saying, well, we don't want to have to do this reporting, so we're just going to go to an attorney and then the attorney won't have to do this. And that's not how it works. So, first, the title company has to report if a lawyer is participating in just plain recording a deed. So, like for TNT, I oftentimes prepare courtesy documents. You know, your client closes and then they come back after closing and they say, hey, I want to vest in my LLC. I'm going to have to report for them as well now because the law requires it. And that cascading hierarchy goes all the way down to the county clerk. So if your client tries to walk into the county clerk and say, here's a deed, I need to record it. If it is otherwise cash, residential, and into an entity or a trust, the clerk's going to have to do the reporting as well. So there's not a getting around the reporting requirement, basically. So the information that's going to get reported to the government, and we handle the reporting, as I mentioned, we're going to have to fill out the reporting person's identity. So these questionnaires, when we send them to your buyer and to your seller to fill out, they can send them to their CPA if they're not sure how to complete them because the buyer form is kind of complex. They can send it to their attorney. They could send it to the business manager. If one of the buyers is kind of the primary paperwork person and the others are not, then the one person can fill out the whole form. We have to report the closing date, the sales price, which is called total consideration under this law, and then the property details, which is address, county, zip code, things like that. On the buyer side, let's talk about them first. We have to report the full legal name of their entity. We have to report the identity of all beneficial owners, date of birth, social security number, physical address, and then how they make their payment. So it is kind of starting to feel a little intrusive on the buy side as far as what has to be provided. The thing that I want you guys to really take away from this is that if your customer is saying they're not going to provide this information, we cannot close the transaction. They have to provide it under the law for us to move forward with it. On the seller side, we have to get legal name, phone number, date of birth, social security number, country of issuance. That's the country that issued their social security number. And keep in mind that every single resale transaction we close, we send out a buyer-seller questionnaire up front. And we may not know that it's a FinCEN transaction yet. And so some of the data, once we decide it's going to be a FinCEN transaction, the data that has to be collected is much of it is a duplicate of what they have already provided to us. But what they're filling out is a federal form. And so I don't have any flexibility to take what they've already given me and put it into the form for them. I don't have any flexibility to say, well, you already gave us our social, so you don't have to give it to us again. Because these forms, once they come in, they go straight from our system to the FinCEN reporting department. So even though it's going to feel like a duplication, it just has to be done. And I think that's a question you'll get. I think your clients will say, I've already filled this out. Why am I having to fill it out again? And it's because federal law requires it. So when I talk about on the buy side, the mandatory information that has to be provided, beneficial owners, what we have to report when we're looking at a company or an entity is that full legal entity name and then the identity of every individual that owns 25% or more of that company. So you might have one person that owns the entire company and we're only going to have to collect the data for them. You might have 4 people that own 25%, and we're going to have to collect that information for all 4 of those people. And we'll guide your customers through the forms. On the trust side, not only do we need the full legal name of the trust, we have to also report who the current trustees are and who all the beneficiaries are as well. So it does feel like we're getting a lot of information from your customers, particularly because it's a cash deal. Cash deals have always been really simple. It's always been, we're going to DocuSign you the documents and you're going to send us the money and we're done. And now we have to get a lot more information from your clients. So this is a place where I anticipate our escrow teams getting some pushback from your folks. And this is where we need your help to help explain to them that, it is federal law and we have to get this information. Once we fund the transaction, we then have to turn around and upload the money that was brought to closing. And so we have to show how much was paid at closing, what form they paid with. So did they pay with a wire or a cashier's check or a personal check? From the information that we get, we have to list the account number that they paid from, as well as the name of the bank that the money came from, and the name of the payor on the cashier's check. So if mom and dad give the money to kids and they're, just going to fund the transaction, when we're entering it, we have to enter mom and dad's information as well. All right, let's talk about what your customer is going to get from us. So by the time we decide that it's a FinCEN transaction, they'll have already received our buyer-seller questionnaires that I mentioned a minute ago. And so when they get that secondary FinCEN email, it's going to look a lot like the first one because we want them to already be comfortable. We're going to use the same product that we use today to obtain the information. It's going to explain to them a little bit about FinCEN. It'll be a link that they click to open up, and then it'll take them into their specific questionnaires. One of the things on the questionnaires is going to ask who is the person filling out this form. And even though it says real estate agent there as an option, this is not a form that I want you guys filling out for your customers, because at the end of the form, there's a legal certification that says, I'm validating and I'm swearing to the accuracy of this information. So if your customer says, I'm having a hard time with the forms, can I just send them to you and you help them? You help me. You need to say no, because you're going to be putting yourself on the hook for the information that's provided. And for that same reason, my folks can't fill out the form either, because I can't have a TNTer certifying that the social is correct or these are the right owners of the property or anything like that. So it really needs to be your specific customer or their CPA, accountant, attorney, something like that. All right, let's talk about timing. I do see some questions in the chat. We'll get to those shortly. So as soon as we know it's a FinCEN transaction, we're going to send those questionnaires out to your buyer and your sellers. And they're pretty easy to fill in if your customer has a little bit of tech savvy with them. For us, the key to closing is that we have to get the forms back, and then on the back end, we send them to the reporting that's required. So as soon as your customer gets the forms, if they fill it out, send it back to us really quickly, you're not going to have any delays with closing. That's the perfect environment, right? Not all of your customers do things very timely, and sometimes they sit on it. Sometimes they treat like the requests that we make as if they're not a super high priority. And so if they're not filling those forms out, they are arbitrarily delaying their closings. We have to have both buyer and seller forms back in before we can get a closing package ready to send to your customer. So we can't close your transaction until we have both of these. And the thing that I'm worried about just in the real world, as far as us actually closing deals, is it is not uncommon at all for a cash buyer to call us the day before closing or the morning of closing and say, hey, my contract was written in my individual name, but I want to take title in my LLC. And they kind of just drop that on us really quickly. So this is a coaching conversation for you when you're writing that cash contract on the buy side. If you've had any level of conversation with them where they're talking about maybe they do it in a trust, maybe they do it in an NTT, they might be getting a hard money loan. That's the point for you to do the education and say, we really can't just drop that into the transaction last minute. We need to make sure that we have that information at a minimum a couple of days prior to closing. And a couple of days even worries me a little, because then we're relying on both buyer and seller to get those forms done pretty quickly. So that's a definite takeaway from class for you. All right. As I mentioned, we can't close if we don't have the forms, because none of my guys like to wear orange or horizontal stripes. Okay. There are criminal penalties that are associated with failure to report. And so that's a serious repercussion for us. So if we're not getting the forms back, we're just not going to be able to close that transaction. Okay. So your takeaways here are, one, I want you to be knowledgeable about the changes. You might have a transaction this month that's going to look different if you shift into March. You also want to watch your cash contracts that are closing at the end of the month. If you think they're going to push into March and it's residential and they're buying in an entity, then it's advantageous to start doing these forms now. You can over-report. It doesn't hurt to over-report, but you can't under-report. So if you roll into the first week of March, all of a sudden we're going to have to get all this stuff. I think one of the things that happens to us sometimes is we will get a contract that's turned in as a cash transaction, but the buyer knows they're going to get a loan. They know they're going to be looking for financing. And usually these are the buyers that are getting some kind of private money. But even if you're writing your contract as cash, we need a heads up if they ultimately are going to try to get a loan so that we can kind of gauge when to send these forms or if we're ultimately going to have to send them or not. On the buyer side, if you're writing a cash contract, you need to talk to your customer about vesting in an entity or a trust towards the end of the contract processing. And also on the seller side, I think if you're the listing agent, you need to prep your seller that if the buyer changes and they're going to buy in an entity, even though it's a cash deal, there's going to be additional paperwork that's going to be required. I feel like some sellers will push back and say, why am I having to do this? We'll have to explain to them, it's federal mandate and it's required. And if your transaction already has acrimony in it, that's probably not going to be an easier conversation for your seller. So just something where I think we educate them that it is a possibility. And then help us. We'll tell you guys if your clients aren't filling out the form. And then it's sort of like telling mom and dad, and you guys get to call your customer and tell them that we need the information. Just know that we're trying to get it done as early in the transaction as possible so that we can just check it off our list. Because if we don't, we can't close your deal. And if you have a buyer or a seller that refuses to fill out this paperwork, they're going to be in breach of contract. And what we've done, I don't know if y'all know this, but I'm on broker lawyer committee also for your contracts. And so we've added language in the drafts that are up for the commission now that makes it a mandatory requirement that both seller and buyer have to fill out the information in these forms. So if one of your clients is refusing to do so, they'd be in breach of the contract. Also, at the moment, we don't have an intent to charge for this process, but I am hearing that some title companies are going to charge somewhere between $200 and $500 to process this FinCEN paperwork. And so what we wanted to cover in broker lawyer is who's going to pay for that fee, because that would be another spot where people are going to argue, well, it's the buyer's fault, but the seller has to participate too. So anybody that is going to charge a fee for this, it's going to be passed on to the buyer side. All right, let me look at the chat. Ooh,
yeah, there's quite a bit. So let me know I've got a list if you want me to go over some of them.
All right, I can see it now.
Great.
Will the slides be shared? So lovely Nicole has been recording for us, so she'll be able to send out that link also. If a buyer is an individual along with his wife, do they need to be reported? So no, the kicker for reporting is that it is cash, residential, and being purchased by an entity or a trust. Now, sometimes we'll see they're going to buy in an entity and also individual names. The purchase as the entity will trigger having to do the reporting. All right, is a 1031 exchange going to be reported? So if the underlying buyer in that 1031 exchange is a company, then yes, absolutely. All right, when our clients ask what this data is being used for, what should we say? Okay, good question, Teresa. So I think what you do is you explain that it's a federal mandate that came from the U.S. Department of Treasury, and that they're collecting this data because the purpose of the data is to find money laundering and illegal activities or terrorist activities. That's just the answer. Can you go back at the end to the info that you need from the people in trust? Sure. Yeah. So from the trust, we have to have the legal entity, the legal name, who the beneficiaries are, who the trustees are, and then also the date of the trust as well. And we're going to guide you with this stuff. Also, we have a little handout that we can send out. Your reps will send it to you. That is something you can give to the buyers and the sellers that explains what this is, what information is going to be collected from them, where it's going to be transmitted, and also how it's held, which is securely. How do we think this will affect timing of the contract to close? So cash transactions still can be very quick closings as long as your customers will do the paperwork. That's kind of, it's up to them. So if we have people that are tech savvy and they fill out our first questionnaire really quickly and then they fill out this one really quickly, there's no delay. If we have people that refuse or people that struggle with it, then you could have a little bit slower of a process. There is a manual option. So if you have, I'm kind of thinking about like those little old lady sellers where they don't understand why we're having to do this and they really can't handle filling out the form electronically. We have a manual form that we can send to them and get them to fill it out and we can get it back for us. All right. Yeah. Why is there an option written that the agent can fill out the form if you shouldn't? So legally you can. What I'm telling you is that you shouldn't, because then you're going to take on the responsibility. And keep in mind that the forms that buyers and sellers are filling out for FinCEN are FinCEN federal forms. So if someone that was writing this decided that they should give that as an option, there's also an other category. I think we'll get some creative ideas there. I think you just tell your customer that you're not comfortable doing it. I'm sure some of your brokerages will have company policies on it as well. Donna asks, if the buyer buys a lot, can they fill the form out once and can it be kept on file? So yes, we're working on the ability to do that. And then your customer at the end of the transaction would just sign an affidavit saying the information is correct. Whitney asked, is this legislative change from last session? It's not, because it's federal law. So it's been something that's been in place since 2024 and it's going to affect now. And that's also why it affects every single county, every single state, every single title company that's closing a transaction. Carolyn asked, what's the consequences if they don't fill it out? Your deal's not closing. So it's a big one. All right. Rebecca says, please go over charges, fees that can be passed on to buyer or seller. So when the new contracts are in place, assuming that that language gets put through, it'll be a buyer responsibility for whatever the fees are that's getting charged by somebody that's charging that fee. If the buyer has a FinCEN number, do they need to provide that detail? So the forms actually don't ask for that part. So they'll fill in all the other information, but that wouldn't be on the form. Russ says, I have an LLC seller currently who is selling to an individual closing March 20th. Will this need to be reported? Good question. So no, so it doesn't work in reverse. It only works initiating by the buyer. So if the buyer is an entity, it's residential and it's cash, it will trigger it. Your seller can be anybody in this transaction, but you do raise a good point here, Russ. So think about those transactions, and I see a lot of you on here and I've worked on your deals. Think about the deals where you've ended up where you have a seller that has 15 people in title because there's a death in the chain of title. Mom and dad died and a couple of the siblings are deceased now and their kids are deceased. And we have a whole lot of people that have to sign on the seller side. Every single one of them has to fill out a seller questionnaire. And so historically, when we have those transactions, we end up with one or two family members that are kind of the controllers of the transaction. They're going to have to be comfortable filling out a form for every single real owner, or every single real owner is going to have to sign one. And we can't proceed without it. All right. If I'm buying a property as an individual and purchasing cash, not in an LLC or a trust, you are exempt. Yes, that is correct. Now, if you buy in your individual name and then later decide you want to deed to an LLC, then it would have to be reported. Okay. I'm aware of a lot of mortgage fraud happening through refinancing. That one doesn't really fall in this specific section here. If our buyers and sellers ask if this reporting triggers tariffs, I think you tell them it's an entirely separate law and it's really geared towards money laundering. When you recommend paperwork get done as early as possible, do you mean when title is open? So as soon as we know that it's a FinCEN transaction and we have the email addresses for everybody, we're going to send them out right away. I taught this class yesterday also, and one of the questions that I was asked is if there's going to be any uniformity between how titles companies process this, and I'll tell you that there absolutely will not be. Some of the people I'm talking to don't even know how they're going to do their reporting, and this stuff goes into place at the end of the month. So I think you're not going to see commonality between how everyone handles it. If you're closing with TNT, we have a super simple link. It can go out really early on in the transaction, and then as soon as your people send it in, we're done. I just need the forms from all buyers, all sellers, and then we're complete with the process, and there's no more barrier to getting to closing. All right. Farm and ranch contracts. So you're probably not going to fall into that, falling under FinCEN unless it is vacant and someone's going to build a house on it. But you're not going to fall into the definition of residential for those cases. Donna Harris asked, is title verifying data or collecting it? So we're charged with collecting the data. We aren't actually going to go back through and look at every single detail that they provide to us, specifically things like the beneficial owner. Because when your clients fill out this information, they're swearing in a federal form that the information is accurate. So Elva, let's see, I'm not sure yet when you're going to see the contract changes. The commission had their meeting on Monday and I haven't actually watched it yet, so I don't know, but it should be in the next couple months or so. All right, Texas is supposed to be a non-disclosure state. We always tell clients that they don't have to tell anyone what they paid. I guess it goes away. That is true as to the U.S. Department of Treasury. Yes, it's not going to be recorded on any documents that go to public record. So it's not like something that's visible in Travis County, but it is something that gets reported to the government. Pamela says, does this include new home builders? They usually write their own contracts and have their own title companies. It will include them if they are taking down those tracks with cash or with a non-NMLS financed transaction. So their title companies will have to do the reporting also. Cynthia says, why do you need the seller's info? Will some responsibility fall back to the seller? So we have to get the seller's info because it's a federal mandate. As long as the seller is giving accurate information, then there shouldn't be an issue for the seller. What the government is saying that they're going to be looking at as to why the seller information has to be collected is to make sure that the buyers and the sellers aren't related in that transaction, because that's where you start to get into the money laundering conversation. Okay, sometimes when a property is farm and ranch, 1 acre may be set aside for residential. If it's intended to do residential and they're going to have a 1 to 4 family on it, that's probably going to trigger it. So here's what I've done for TNT. The last 2 weeks, I've gone around to every branch and done a very similar presentation with our folks and kind of taught them about how our system is going to work so that they can get really comfortable with it. The biggest takeaway that our folks are thinking about right now is the importance of educating your customer, because this is brand new, right? And even if you had a client close this month and they turn around and they close next month, it's going to feel different to them. So when we get your contracts in, we call every buyer, we call every seller, and we do a wire fraud conversation where we warn them about, making sure they're sending money to the right place. And in that conversation, if we see a transaction that might qualify a cash deal, and it's certainly if it's being purchased by an entity, we'll start the conversation then so that when they get the email from us, it's not just brand new day and they don't know why they're getting it. We'll also call you guys in the beginning because, you might not have one of these for a couple of months and you'll forget because it's not at the top of your list. So we're going to work really hard on education of customers. And if your folks have questions when they're filling out the forms, all of our folks have gone in and done a test file as if they are the buyer or they are the seller so that they're real comfortable with what our customers are actually going to see. And so they can help answer those questions also. All right, Robin said, can you repeat the non-NMLS part? Yes. So NMLS is your lenders that have gone through their vetting channel, and because of the types of loans they give, which is like, residential retail loans, they have all their own vetting stuff. And so those transactions don't fall through FinCEN. It's the ones that don't have the NMLS number that will. So it's hard money, individuals, mom and dad, private equity, stuff like that. All right, so here's what I'm going to do. Most of you guys know how to find me anyway. But I'm going to put my email and my phone number in the chat. And as you get new deals, I don't expect you to remember all of this stuff. Your key takeaways are the types of transactions that are going to be affected, and then the importance of getting this information from your customer. But just send us what you're seeing. If you may be talking to a customer and explaining all this to them and they need to hear it from someone else, we're happy to have those conversations also. Okay.
Anybody else have any questions for Latra? I know it's a lot of information, but she, has really boiled it down to the bullet points. We will have this recording available to send out to you later from your TNT sales rep. And we are grateful that you joined us. And please do remember, as Latra said, she's on the broker lawyer committee. She, has information that not everybody has. So it's important to recognize not all title companies are the same because they don't all have Latra. So we are grateful to have her and her wealth of information and grateful that you guys joined us this morning. So without any further ado, any other questions, we're going to let y'all get on with your day, but we appreciate you.
Perfect. And as soon as I know we've got contract changes that are confirmed, we'll do a whole class because there's some good stuff coming.
Yay.
Thanks, guys.
All right,
Thank-
y'all have a great day.
Thanks.
Bye bye.
Thank you.
You're welcome. Bye bye.